Are you wondering how real estate works? Why do prices ebb and flow? Why do home prices go down? Well, stay tuned as we talk about 12 factors that affect the value of a property, as well as market trends to track and understand. Hi, I'm Theresa Wellman with HomeownerExperience.com, your local San Jose, California Realtor. I help home buyers and sellers strategically plan their next move. So today we're talking about the market factors that affect property value, as well as the market trends and the outlook for the real estate market in 2021. So we're gonna get into some charts, also go over those 12 factors. So come join with me on the computer to look at this info. So here we are looking at a Santa Clara County real estate chart, all the way from 2000 to 2021 as this video recording. I am focusing here on the Bay Area, California housing market because this is where I work, but this will teach you some basics about real estate economics and the supply and demand factors, as well as 10 other factors that affect the property value. So first, let's really get into supply and demand. So on this chart, you'll see the yellow line is labeled inventory, which is our supply of homes available. And demand is equated to the number of sales, though that's a little bit of a trailing demand indicator, but that is the green bars that you see at the bottom. So as you can see, there is a very cyclical cycle to that inventory as well as the sales. They are typically peaking mid-year in June or July, and then softening as we get into the beginning or end of a year, and then cycling back up in the spring. So you would expect many years to be seasonal in that there'll be most inventory and most options and most supply in the summer. Demand typically peaks a little bit before the summer and then starts to settle out through the fall. So if you think about that, if there's less demand in the fall and there's a little bit less inventory, the question is, when does that tipping point happen? There's probably some points where there's some opportunity to get a little bit better price or deal, even in a seller's market. So let's look again more at this. If we look at the cyclical cycle of the inventory, here we've got a couple peaks in September. Here's a July. 2017 was a very interesting year locally. We peaked in April, and 2018, October. Then we went back to a little bit more normal in 2019. 2020, obviously with the COVID pandemic, was a very interesting year, and 2021 has just been extremely low inventory with high demand. So supply and demand are really controlling our local real estate economics, and I know that's happening all over the country as well, but those are the two first main factors. Let's talk about those other 10 factors that affect the property value. So it's going to be location, of course. Where is that property? What kind of access to transportation? I'm sure jobs also, but that's a little bit more of point number 4, local economy. What's the local unemployment rate? How many jobs are there? What quality of jobs? What are the demographics of the people and the jobs? Those all affect, of course, the housing prices as well. And if you put that in context of Silicon Valley, there's a lot of high-tech jobs here, high-paid, high-tech jobs that really affects the people and the amount of people that have high incomes here, therefore that can afford the high property values. So that definitely is a local factor. And when you leave this area, it's a totally different factor. So you need to take account when you're looking at those items and different areas. So point number 5 is amenities. For example, what are the access to local nice features? For example, here in the Bay Area, we have the beach 45 minutes away, San Francisco 45 minutes away, Napa less than 2-hour drive, Tahoe and skiing and beautiful lakes, all within 4 hours, national parks. So many great amenities in this area. When you leave this area, that of course is different, but every area has its unique amenities as well that affect the value and prices of properties. Point number 6, environment. Is there a lot of traffic? Is it safe? Is it clean? Those factors. Number 7 is the property features. What kind of bells and whistles or local things does that particular property have? Maybe updates, the size of the lot. All those factors, of course, affect the value. Then, bigger scale, number 8, interest rates, or the cost to borrow and have a loan on the property. Right now, interest rates are historically low here in 2021, so that is making it a lot more affordable for buyers to buy, and that's part of the reason why demand is also up. Number 9, the cost and access to building materials. So this affects new supply coming to the market with new construction. It also increases the value of updated properties because it's harder if the cost of building materials or accessibility materials is difficult like it is right now. It is harder to update older homes, so therefore people really value the already updated homes even more. And point number 10, the overall market outlook. Are people feeling positive about it? That really affects demand. demand. It affects whether investors jump in, etc. And number 11, the availability of local land. Well, here in the Bay Area, we just don't have much land to build on. But if you go to Texas, wow, there's a lot more land they can expand on. And Las Vegas, for example, they continue to build and expand. So that definitely affects the availability and the supply as well. And number 12 are new trends. A new trend that's coming up here in 2020 and 2021 is working from home and access to tech. So if you are able to work from home, where you live really doesn't matter as much, right? And that's what's made some of these factors and other markets that typically aren't as high valued really take off. So those are the 12 factors affecting the property value. But now let's really understand, how do we analyze the real estate market? Well, again, we're going to talk about supply and demand, right? Is the supply up, down? What's the trend? Is it continue to get better, getting worse, more challenging? Another factor is what percent of asking price. Is that again increasing or decreasing? That shows how intense the demand is, as well as historical information like this chart here with the seasonal, right? Inventory should be a lot higher right now, and the sales are still really strong. That just means we're selling things so fast, but we expect sales to drop as we head into the seasonal end of the year. So I think even with the low inventory, things are probably going to settle up based on that factors. So let's zoom in here a little bit to the actual factors and understanding the trends and the changes. So this is the latest data for Santa Clara County, San Jose, specifically single family homes. And this is data all the way through the end of July 2020. So this is just a quick overview, and my market update report will be coming soon. I recommend you watch that next. But the median prices, as you can see, are dropping. Average price is dropping. The number of properties or the demand is dropping. The pending properties also dropping, and the active supply is up. And therefore, as you would expect, the sales price to list price ratio is dropping a little bit. But look at that, still almost 10% over asking. So because we only have 19 days of inventory, everything's selling in just 19 days, we obviously still have a supply problem. Even with a slowing down demand and that short of supply, the market will continue to appreciate, but just probably a lot less drastically. Now, if you look at this market barometer chart that you'll find on my website, you see this gives kind of an indicator of how intense the market is. And you can see that this last month, the intensity has dropped down a little bit, showing that things are starting to settle a tad. So if we go to this website go to this page on my website, this is the San Jose, California real estate market trends. Up here at the market stats, you can pick out specific areas or refine it yourself. But if you scroll down and you change the area here, or look at this data that I just showed you, you can also click on it and get some year-over-year numbers to get an idea of what's going on. You also, when you hit that change button, can really focus down on specific months or years and get an idea of what it looked like in the past and compare it to now. For example, if you bought your home 15 years ago, what did the data look like 15 years ago versus today? That'd be an interesting comparison that, of course, I would help you look into. So as you can see, we're starting to see some sort of a peak. Year over year, we're way up in most of these numbers, except the inventory is even lower, which has fueled this, right? The sales price to list price ratio is a lot higher, and the prices are higher because of that inventory shortage. But like you see here versus the previous month, it's starting to soften. So I do think we're hitting that seasonal peak, and we will see in 2021 a very traditional year with the cycles slowing down. And let me bring up those slides again here. Let me minimize this. So if we look at this data again, as you can see, there is just lots of ebbs and flows in prices, and prices have really shot up again because that's supply and demand. But as I said, I expect things to settle. So as you can see, many falls, prices will actually level off. Some years they kind of hold and they don't dip until the very November, December timeframe. These prices, though, are a 30-day not leading, but following indicator, because that's the closed prices for sales. So as the market starts to change, you're going to see the prices start to change. So this is through June. It doesn't show the July stats, but I guarantee these numbers are starting to peak and settle out a little bit once we get that charted. So definitely check out next my San Jose market update video, where I'm going to go more into the specifics on that. Or if you're looking at specific neighborhoods, you might consider my Almaden market update trends video as well. Thank you for joining me.